Welcome back, everyone, to the Bank Customer Experience Podcast. My name is Bradley Cooper. I'm the editor of ATM Marketplace, and I'm joined by our friends at Cook Solutions Group. I have on today Scott Fieber and Kaitlyn Bridgers-Petrie. It's great to have you both on.
Glad to be here, man. Thanks for having us again.
Perfect. So today we're talking about an interesting topic, a little bit of a broader topic. We're talking about really how banks can differentiate themselves on the branch level and on the ATM level and on many different levels, and also how they can use that to increase revenue. So getting right into that, banks really struggle to differentiate themselves from competition. So, what are some key differentiators for you that the common consumer can understand and clearly communicate as a financial institution?
Yeah, I'll take that one. So I think it's interesting for all of us, probably even on the podcast and those listening in. We've lived and breathed in this world for so long. It's like we know. I think the differences between even a bank and a credit union. Even if you think about the new like non-banks and the digital banks too, like that's a different piece. But I would challenge you if you were to go talk to your neighbor, your friend, and say, "Hey, what's the difference between a bank and a credit union?" I bet most wouldn't be able to answer that question. It's very similar to like if I were to ask any one of us, like, hey, what's the difference between like a Home Depot and a Lowe's? It's like it's the same store with a different logo on it, right?
Right.
And so I think sometimes we got to figure out what is different. Like why would you go to a Lowe's versus a Home Depot? And for me, sometimes as well, it's just purely based off of convenience and location to me, whichever's quicker. Um,
Right.
but if you were to ask someone that worked at Home Depot or Lowe's or a contractor, they'd probably be able to tell you pretty quickly the differences between the two. I think I even saw a study at one point about Lowe's caters more to women than men based off of their organization, I guess, of how they, again, I'm not an expert
I
right on
could
it,
see
but like
that
interesting concepts, right?
based
To
on their
think about it.
branding. Yeah.
And so, yeah, I think you've got to find a way where you have tangible reasons that resonate with the general population. And sometimes that could be things like, just like it is for Home Depot and Lowe's, like it's just branches that are more convenient to me. That's the reason why we've seen studies where that's played in decisions of why people bank with certain banks is just purely off of bank location. Even if there's no interest at all to ever go to the bank branch, just knowing that it's there is psychologically plays into their decision, right? But other things like maybe it's hours that fit my lifestyle better. It's not the only 9 to 5 like every other bank in the world's open. Maybe it's different hours that are more to me. Maybe it's you know something beyond just like, oh, it's our member or customer experience that makes us better, because everyone says that, right? So I think yes, there's definitely things out there that can help differentiate. We can talk that as we go throughout today, but if you can't clearly identify that as a bank or credit union into to a way that any general person can point to it, I think that's probably a problem that we should probably look at figuring out.
Yeah, I agree. Caitlin, did you have anything to add to that?
I would add to that we are seeing a lot of technologies out there that are providing different efficiencies for them, and like Scott said, they are all kind of comparing the same metrics. We have longer hours available. We have more technology available. It's really making that differentiator part of your overall strategy from the beginning and not just piecemealing it together as you continue down the path. It's really a deliberate differentiator utilizing that technology to your benefit to create efficiencies within the branch.
Sure. Yeah, great points, both of you. So I want to dive in a little bit into the money side of it. So it's obviously a shrinking market for banks. They're competing for deposits among people who are spreading their cash around everywhere. So what are some methods that they're using to increase deposits in this shrinking market?
Yeah, I think the merger and acquisition world's getting kind of wild, and it's probably going to get even
Hmm.
crazier this year and onward. So, yeah, I think again, part of that differentiation piece is like, why would I, as a general consumer, want to do more with that bank, right? What am I going to do to get my deposits? Or if I'm a business, right, how do I move in that way? We've seen it where obviously banks approach our company all the time about, hey, can we move our business deposits over to them, and why? And sometimes there's a unique reason for that. Hey, what if we have a partnership here where we provide some services and they provide some services in exchange, right? Or we're looking at the kind of risk tolerance when it comes to some strategic thinking. Because I think there's a ton of ways to increase your deposits, right? Especially in a shrinking
Sure.
market. It just requires some thinking outside of the box and then coupling that with, I guess, your bank's risk tolerance. But really, it's going down to like be willing to try non-traditional things. We've
Mm,
seen technology help, but it starts with like a defined strategy, and then from there, like we've even seen some customers, for example, they'll leverage branch expansion through like ITMs or micro branches in some cases to serve an
right.
underserved area or even to work in a select employer group type deal, and use that to pay for the partnership. So, for example, if you go into like an underserved town, in exchange for the town's deposits on the merchant side of things, they'll provide the retail deposit. So I think there's again a lot of different ways to go about it, but I think the other piece is really thinking outside the box. What is everyone else not doing or afraid to try? Or what technology could I implement that would allow me to do stuff that other people can't do because I may be the only one using a certain form of technology to do it. But the fact of the matter is, if you don't try something, you're going to probably end up getting acquired or merged because of the shrinking market, because there are some that are out there doing more and able to grab some of that market share. And I think just knowing your wallet share, right? What is it today with your current customers? That's probably your easiest spot to grow, right? If you can do more with your current customers that you have. I think the average consumer has, I think it was 6 different relationships with different banks or credit unions today. You think
Sure.
about it as whether it's your checking savings or whether it's your credit cards, whether it's insurance, whether it's the list goes on and
Hmm.
on. Um, how can I get all that into one spot? Because for me as a consumer, that'd be nice, right? Not have to log into 6 different websites to manage where all my
Yep.
money's at. To have it all in one spot would be super helpful.
Yeah. I think that's a great point and kind of leaning into that technology side of it because obviously you mentioned ITMs as well as some other alternative methods. So, what technology is available to help you gain those deposits and increase revenue? And do you have the resources to implement them?
Whether it's just trying to balance that within a bank or credit union, right? Typically, it's hey, we want to do something, but we don't have. And when I say we, I mean the credit union or bank. They don't have the people to do it, right? We call it right sourcing. That's where CSG kind of sits in a lot of times. Is we're there to help as an added resources for them to help get some things done. But yeah, when it comes to technology that's out there, I mean, there's a long list of things to help you with gaining deposits and increasing your revenue. ITM's absolutely been something. Picking the right digital banking provider, just getting more efficient on the back end too, so you can free up your employees to do more too is something to not be overlooked. But yeah, I think there's several things out there depending on what you're trying to do, right? If it's branch expansion and that's the way to which you want to increase your revenue and gain deposits, there's ways to do it beyond just the typical 3,000 square
Right.
foot branch with 30 people inside there and doing the technology like you have, right? Can we do it with one
Hmm.
person, no people, 2 people maybe, and leverage the technology that's out there in order to do something, whether it's ITMs or cash recyclers or video from a consultative sales perspective. There's a lot of really unique
Sure.
pieces out there now that can definitely help you.
Yeah, I would add to that we see clients all the time that are taking some of those more transactional features and putting them in the technology space, like the ITM, utilizing cash recyclers to make more efficient transaction times within the branch. That alone is really just helping them be more efficient with their teller's time, utilize their resources more readily, more available to them, and use their time and their money in better ways, reinvest that into their membership. I've seen some really cool things in the Washington State area where in installing, excuse me, installing TCRs within their
Hmm.
branches has created efficiencies by lessening their transaction times.
Sure.
That is creating more time and space for the tellers to be more advisory
Hmm.
instead of spending all of their time on those transactions.
You all both mentioned a little bit about kind of branch expansion initiatives, whether that's adding an ITM or a TCR or anything like that, and kind of maybe moving the employees more to an advisory role. What would you say is the current risk tolerance for branch expansion, and how can FIs mitigate that risk tolerance?
The risk tolerance is going to vary by customer, right? I mean, everyone's some are way more risk adverse than others. Some have, are more open to doing different things. I think the mitigation aspect comes into, again, looking at um, just alternative ways to do it. So a good example might be, right, maybe you're going to go with a micro branch that has ITMs or ATMs in it, and it's very low staffing. If that branch doesn't work out, like it's much easier to remove that machine, put into a new location, and try again than if you were to have bought the building or built a building, have staff physically there with all the technology, and then all the regulation of closing a branch
Mhm.
down and all the headache that come along with that. Like
Right.
that just is too expensive and way too risky to not know if you got the right location to begin with. So we have seen several customers where they go in at a, again, different ways, right? Maybe you buy the land and you develop it from a purely commercial development lens, not even with branching in
Sure.
mind necessarily. Put some machines there to help build deposits and kind of test the market. If it works, great. Now you have a branch. You could come in with a full scale branch at that point and do it. Or worst case, you say, hey, it doesn't work. Let's pick up the machine, sell off the land, make some profit off the real estate transaction, and try it again somewhere else because all it was moving an ATM. There's no really regulations involved in doing it at all. So I think, yeah, risk tolerance, you got to ask yourselves that, yourself that, like, is what is our risk tolerance, period. And then from there, yeah, can we go out and expand branches and do it differently than the traditional, find that golden nugget location that I can then build that branch and hope that I can staff it and maintain it and grow it like we want to. It's just, I think it's an older school model that is really hard to ROI and can take years to do it, where there's some better ways to test the market, and make that decision a lot quicker, and then either double down on it or abandon it if you need to.
Yeah, I would agree. Working with some of our partners here in Oregon, we've been able to develop different branch models where they may have more risk tolerance in certain areas because they have more data on that area. But if they're going somewhere they've never been, they're in a new charter or something of that nature, they can really put a micro branch down and test the waters on a way more efficient basis than a huge brick and mortar building. I think the data is showing 25 to 30% less to get those satellite deployments up and running versus a branch, and really test the water and not be too tied to that location if it doesn't work out.
Well, the cool thing about that too, Caitlin's a good point, because like let's just say you had the budget for one traditional branch, right? If you can do it for 20
Mhm.
30%, like now you can get 3 or 4 locations out there for the cost of one traditional branch, and you can really
Mhm.
saturate the market a lot more easily too. So again, like going back to the initial question of like what's a differentiator for me, it's like, shoot, if I can get 4 logos out there that are in the neighborhoods or in the merchant areas where I need to be at the same cost point of trying to figure out one golden spot to put one branch at the same price point, it's like, why wouldn't we do that? Again, I get that sometimes you're gonna have to risk a little bit. Sometimes you're not gonna have everything you would have in a micro branch that you would, a iconic type branch, for example. Um, but sometimes you don't need everything in every branch, right? Sometimes you just need select services that that area needs, and if that's again meeting the customer where they're at, and then if they need something more expanded, then sure they can drive an extra few miles and go get that done, or they can, jump on a digital channel or something like that.
Yeah. I really like you leaning into this topic of micro branches and efficiency. And I had a
Yeah.
very specific question about that. So, if you could reduce that efficiency ratio by 2%, what impact would that have on a branch's or an FI's bottom line?
I would think it'd be pretty massive personally. I mean, any business owner wants to be able to get, I mean, any percentage point matters. Obviously, the bigger the bank or credit union, the 2% is going to have a bigger impact than if you were smaller. And I think it's a balancing act, right? I mean, obviously, you don't want to be so efficient that the experience takes a hit, but also on the flip side, you can't be so rich too that you can't make a buck. Like we still got to be able to
Right.
manage this. But yeah, I mean, if you were to, I don't know, I'd probably challenge anyone that's listening to go through that exercise. Like, what is 2% for you? And is that a good spot? If your
Mhm.
efficiency ratio is a little higher, maybe even 5% in some cases could be the right
Right.
number. But if you're already pretty lean, man, can you do 2% period? A, that's a good question to ask. And if you did, like that could help pay for whatever technology you're trying to accomplish here, right? That maybe you don't have the budget for today, that frees up the money to do it. Um, I don't know. It's an interesting question though, for sure. And I think it's a metric that's worth asking because that's something that could absolutely help you move one direction or another versus staying stagnant.
Yeah, I think just driving home that operational efficiency within the branches, that's the piece that's really going to using technology and automating some of those more transactional situations is really going to have that impact on that 2% efficiency ratio or increasing your net income. Every transaction matters, so decreasing those times and creating more efficiency within the branch, leveraging technology to do that is definitely going to be the name of the game there.
And I think that's definitely important. And I think there is a potential risk here when we're talking about technology, and that is, vendor creep. So, how do you control that vendor creep and maximize your already established vendor partnership so you're not ending up with so many vendors that you don't even know how to manage or handle them?
Well, I mean, that's part of the efficiency piece, right? Like if you the more vendors you add, the more that's got to be on somebody to manage all of that, and that's going to take
Right.
time, that's going to take cost, and therefore your efficiency ratio is going up. Um, yeah, I mean, I think anytime you have to buy a platform to manage something, that should start to ask the question of like, what are we doing here, right? And vendors is one piece. Like, if there's so many vendors, we're trying to figure out who does what and how what are we doing with them. That's tough. So we call it vendor creep internally, just because yeah, it can slowly happen and you don't realize it. It's not vendor creep like they're creepy vendors, hopefully, but
No, hopefully not.
it should be like vendor like, hey, you're slowly creeping up because so and so went to a trade show and saw this cool little widget, and next thing you know, we got a new vendor on board to do that. Versus what if we go back to those industry partners and experts that we know and ask those questions first, because odds are they could probably do it for you, or they know of the best of breed in the market that could help and refer that in. Again, if you have the right partners that you work with today. So for us, yeah, limiting that down, maximizing the partnerships as best you can, is going to do a couple things, right? It's going to create deeper relationships with your current partners, and then B, it should reduce your overall spending because you're not adding more logos you then have to manage with due diligence documents on a regular basis and keeping up with all the accounts receivable, accounts payable, and all that stuff too that comes along with each one. So
Sure. Great point. Anything you want to add to that, Caitlin?
But yeah, I would say every department has the best of intentions, right? They're always
Absolutely.
purchasing solutions that they think are going to create efficiencies for their sole purpose. And sometimes those departments aren't talking to each other. So they're going with this vendor for this and this vendor for this. And once you really get everybody in the same room and talk about what the long term goal is and what the objective is, you can find some similarities and standardizations and really try and consolidate vendors down and create efficiencies in that way.
that's actually a good point. It made me remember that too, Caitlin. We've had since we live in like the video surveillance world quite a bit, Brad. Like it's interesting because that's always been a security decision, right? You work with the facilities manager, whomever, saying, "Hey, I need to buy a video surveillance platform for our branches or our building or whatever you might be," and they make that decision usually in that silo where it's like, "Hey, we're gonna buy this solution or whatever." It's interesting because we've also had people on the other side, like in retail or marketing or operations, go and look at investing into other platforms to get some insights and data into the branch. When all
Sure.
along they could have leveraged their video surveillance platform in order to do that through some analytics. And it's like,
Right.
instead we stood up an entirely new vendor, partnership as long with another technology when we could have leveraged an existing video surveillance platform with analytics that could help them with things like heat mapping or line crossing or
Right.
just insights into the experience that you're having inside the branch. So again, sometimes it's stuff that you wouldn't have thought through, but that's where I think having those relationships are important to Caitlin's point, but also that communicating internally that we're not just purchasing things to solve one problem within your department because odds are something already in play could help if you're using it more.
Fantastic point. Very important to keep those partnerships and those relationships. Last question. Have you all, as Cook Solutions Group, hosted a strategic workshop with those partners to kind of maybe go over these questions in more detail?
Yeah, we'd love to. So I mean that's partly the reason why we changed our name from Cook Security Group to Cook Solutions Group. probably 6 years ago now, 7 years ago now.
Mm-hmm.
Partly because of that. I mean, I think we are solutions providers. We are here to help with the strategy side and find the right solutions for our customers. I would say too, in some cases, we may not be the right option, right? Or we may not do something that customers may need, but we're still here to help regardless, even if it makes no monetary gain on our side. We're here in the long haul to take care of our customers. The money will come eventually, but if we can help know who's best to talk with in the industry and where to go from there, we're happy to have those conversations and at least guide them down that path to formulate that. And sometimes it's just coming with the hard questions, right? Of, hey, are you thinking about this? Have you thought about that? And then from our lens, being able to have seen it with other institutions, we can kind of give some feedback on what's worked and kind of trial close some of those different ideas that may come up in that session with peers that may have done it or not done it successfully or successfully. So yeah, I would say look no further. We're happy to be that company to help with the strategy. I know Kaitlyn's had the opportunity of doing many of these with customers as well, and can probably share some insight too from what she's seen.
Yeah, absolutely. I think the strategic workshops have been so beneficial to the clients that I've worked through them with. It really just helps align all of those different departments and ensure that we're asking the hard questions, like Scott said, and ensuring that all departments are in line. And I think it reveals a lot as you go through that when your teams start talking and they start. One department talks about their perspective, the other talks about theirs, and then we have to table that conversation for a second because it sounds like we got to dive deeper into the strategy there to make sure things are aligned. So we love these and welcome these conversations and these meetings. And I think that within those meetings, we can really uncover a good strategy that is beneficial to all parties within the organization.
Great points, Scott and Kaitlyn. Is there anything you'd like to leave our audience with before we sign off for today?
Our marketing department would appreciate if I said this, but we've always kind of said think CSG first. A lot of times, again, if it's not something we do, that's still fine. Like think of us and come to us because I think we're always there to help. Again, brainstorm and bounce those ideas off of us. Again, if it's not something we do today, odds are we know of a really good company that can do whatever you're looking at doing. And so again, conversations are free. The barbecue sauce usually comes with it too. So as part of our
There you
meeting,
go.
if you don't know, you don't know, but if you know, you know. Yeah, no, I think we're here. Like I said, whether it's a paid engagement or not, like we're here to help because generally speaking, if banks and credit unions thrive, so does CSG. And so we're here to guide as a strategic partner at the end of the day, just to help continue to move the needle in the right direction.
Absolutely. We only get better from our experiences with our partners and learning and growing with them. It helps us all be better and get to the same goal of success and more efficient processes. So thank you.
No problem. Thank you so much, Kaitlyn, Scott. Loved having you on. And thank you to our listeners as well.
Glad to be here. Thanks, guys.